All right, what is going on, everybody, and welcome to another monthly market update looking at the real estate markets in Hamilton and the Niagara region. This installation is for July, if you couldn't tell by the beautiful weather that we're having, albeit a little bit warm, but that's all right. We'll stick it out, change up the environment for this update, and see where we get to. So what's been going on since the last time that I talked to you folks in June? And mainly, we're really looking at the interest rates. That's the big picture kind of across Canada right now is the Bank of Canada just recently reduced the interest rates in June, and that definitely put some positive buyer sentiment into the market. But these things take a little bit of time. So we haven't really seen the direct impact of that. And there still is a little bit of hesitation in the market when it comes to buyers and investors and people just watching the market because there's still a little bit of trepidation there in the sense of, well, will the Bank of Canada continue to lower interest rates, or are they going to, pause them and kind of hold them for a little bit longer? It really is up in the air. Now, the Bank of Canada needs to start really lowering interest rates in order to make the Canadian market more appetizing for buyers, investors, etc. So right now we need to start lowering interest rates for that reason, but also because there's going to be a lot of Canadian households who are going to be renewing their mortgages in the next couple of years. And if interest rates stay high, that's going to really put big financial strain on most Canadian households, like I said, over the next couple of years. Now, you'd think it'd be a shoo-in for the Bank of Canada to just continue to lower interest rates. But there's kind of two things that might be a caveat there. One is they don't want to overheat the housing market, which has already been rebounding very well since its lows in the wintertime. And the second is that they have to battle inflation. So they need to keep inflation low. And kind of in an unexpected turn, inflation actually jumped up to 2.9% last month. So that's something that they're monitoring too. So what will the rate decision be on the 24th? Well, we don't know yet. And it's going to be interesting to see what they do and how that impacts the market. But let's zoom in and talk a little bit about what's been going on in the Niagara region specifically and in the Hamilton region specifically. Now, if we look at Niagara, it's been doing very well since the winter. We've seen month-over-month increases that haven't let off in that time. So since December, January, we really have seen consistent increases across the board. And again, just this month, we saw another 1% increase from the month prior. Now, what's interesting is if you look at the Hamilton region, and the Hamilton region was telling the same story as Niagara, which is where you had all of these increases that were happening month over month. And now, for the first time, we've actually seen a decrease in prices. Now, Niagara has gained 1%, but Hamilton has now gone down about 2% in your median home price across the regions. So it's really interesting to see how Niagara continues to keep going up and continue to appreciate in value. And Hamilton has just found its first kind of stumbling block or its first little lull in the market right now after months and months of constant increases. So I guess now both regions are really going to be paying attention to what's going to happen again with the interest rates just to see if there can be even more acceleration or if those lulls that Hamilton just started experiencing are going to continue. We'll see. Okay, now let's zoom in one more time and we'll talk about little pockets that I'm seeing in the different areas that are kind of bucking the trend. So let's start by talking about Niagara. And generally, things have gone up, again, about 1 to 2% in most regions of Niagara. And one of those areas is a little pocket that I've been talking about for a while, and that is with condo apartments in Grimsby, specifically in Grimsby on the Lake. Now, this is an area that has seen the decline in the same sense that we were seeing month over month when interest rates were starting to go up and sentiment was coming out of the market, but they haven't rebounded yet. They've kind of been stuck for months now in this little lull, in this flat period where really there is some big value and big opportunity to actually purchase something and find something that I believe is underappreciated in the current market. And the second area I'm looking at in Niagara with some interest is in detached homes in Font Hill. Now, Font Hill is a really great area, perfect for families, very, very nice community there. And what we're seeing month over month is that they actually have flatlined in prices. Again, that doesn't go necessarily in grade with what's been going on in Niagara in general. So again, I see this as like a little bit of an interesting data point that says to me there might be an interesting opportunity for some good deals or some good opportunities to be found in Fonthill when it comes to detached homes. Now let's shift over and talk about some places in the Hamilton region. And one of the areas that I have my eye on, which is very interesting to me, are detached homes in Ancaster and Dundas. Now, the two luxury markets that we're seeing there also coincide with Burlington, and those have seen some very severe drops in terms of the average price month over month when it comes to the detached homes there. So if you look at all three of those, what I'm really looking at and what I'm seeing in those three areas is a higher than market average drop in terms of price comparison month to month. Now, luxury markets are always an interesting thing because they almost act as the canary in the coal mine. They are more susceptible to price changes, whether it be go up or down, when markets start to shift. So is this a sign of things to come? Well, we'll see. But it's going to be interesting to know that the appreciation that we're seeing in those particular markets isn't as strong. In fact, it's gone down from last month. And then what's very interesting to see is this kind of coincides with the market report that I did last month in June, where I said everything in Hamilton has gone up except for detached homes on the mountain. Now, what's interesting is those are the only category where they've actually increased in value. So is that just the market catching up to them finally in terms of where they were last month? Or are they retaining their value very well with the market kind of going down over time? And so that's what I'm seeing overall when we look at a kind of a province-wide trend, when we look at the two different regions, Niagara and Hamilton respectively, and then those little pockets where I see some opportunities in both those regions. And so when we take everything that we're seeing and kind of distill it down to some points of advice, my outlook is this. We are still in a great window of opportunity for buyers. There are lots of models and lots of predictions and lots of big organizations out there like the CMHC, like a lot of the big banks, that are talking about how we're moving towards record level prices as we move forward into next year and the year after. Now, you're going to hear me say this a lot, but this is just in tune with what we've been seeing for the last few months. There isn't enough supply to keep up with the growing demand for housing in our province, especially in big metropolitan areas. And so what that's going to do is it's just going to put a lot of pressure on prices and continue to push them upwards. So if you are in a position where you are able to purchase something now, or you're thinking about probably purchasing something in the next little while, now is a really great opportunity to do so because we're only going to get more expensive as things move forward in the future. Now, my advice for sellers is the inverse of that, which is if you don't have to sell right now, don't. Now, things are looking up in the sense that the lowest prices are behind us. So you've actually gained some ground back versus where we were in the winter time about half a year ago. But for all of the reasons that I was just mentioning, prices are expected to continue to go up. And so if you don't have to sell in the immediate future, I would hold on to the property as long as possible and just watch the equity rise over the next couple of years. And if you do have to sell, and if you're in a position where you do need to put your home up for sale, there are always things that you can do to raise the immediate value of your home to prospective buyers, which is clean, organize, do landscaping at the front, fresh coat of paint, new light fixtures, things that aren't going to break the bank, but are going to make a big difference when people walk through your home. And that's it for my market update for July of 2024. I hope that you have found this helpful and insightful. And of course, if you have any questions about what I was talking about or about the real estate market in general, feel free to put them in the comments below. I'll also have my contact information in the description. So if you want to reach out via a call, a text, or an email, that is all good too. Get a hold of me any which way that you want to, and I will answer any questions that you have. Until next month, I hope that everyone has a beautiful and safe and wonderful start to their summer, and I will see you next month in August.